gross revenue was up 26% year over year. That again was tied with the first quarter result and would put it on pace for the highest growth since 2011. In Q1, they spent a lot of money on investments, and the street was worried that they would spend again. They actually surprised on the bottom line, kept expenses in check, and we think there are multiple call options ahead that aren't embedded in the stock at a currently trading at a market multiple, and that remains with Waymo, the cloud, the hardware business, and then YouTube. So there are 4 call options beyond the core advertising business that are emerging businesses that we think ultimately can help power the next story beyond just the core advertising segment of the business. There was really only one black eye, and that was in Europe. The growth rate decelerated just a tad. The rest of the world, Asia Pacific and U.S. accelerated. Management indicated that GDPR was way too early to call if that had an impact in the business. But the only thing that we really saw that was of concern is the European business is off just a touch, 19% growth down from 21% last quarter.
Let me ask you about valuation then. If we look at these earnings and try and extrapolate forward, the stock's already had a terrific run. We've seen 17% upside year to date. How much more gas in the tank to the upside for the stock, do you think?
We raised our price target to $14.50. That's on raised and rolled forward numbers. The multiple is unchanged. As I mentioned, right now Google trades in line with the NASDAQ comp at about 13 times forward, and a slight premium to the S&P at 11.5. So we don't think the multiple is unreasonable. Remember, Google has been basically stuck under 14 times earnings on EBITDA for the last 10 years. And effectively, if some of these new initiatives start to kick, we think investors could give it a slight multiple improvement from where it's at. So we still think that there's room. And if you look at the big internet names like Amazon and Facebook have outperformed. This definitely is the worst sentiment among institutional investors, and we think these results kind of bring investors back to the table to realize that that the core business isn't under duress. I think there's been a big concern that Amazon's ad business could take a bite out of Google's core, and we're just not seeing that from what we see from our perspective.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.